Welcome to weekly update number 19. This is going to be a little bit of a different week, so let's just jump right in. For the week, we're up about 2%. We're still in the middle of the trading day on Friday, so it'll kind of be fluctuating as we record here, but just so you know, I think we're going to call it about 2%, which is not too bad. More importantly though, I want to talk about the addition to margin to this account. Now, typically speaking, when you are dividend investing, you don't use margin because it eats away almost all of your profits from the dividends. But taking a step back and looking at the overall situation of the market, pretty much everything is still on sale from the pre-crash. So I feel like using margin right now to get in on good pricing and to further motivate me on having a larger account value and increasing the income drastically, it's just going to be an overall positive thing. So I decided to pull the trigger on that. Now the account value is $6,000. Half of it's margin, half of it's equity. So it's a riskier move, but I think it's the right move, again, because we're getting in on good pricing and it's going to keep me motivated to keep investing in this portfolio. So in terms of paying down this margin, I'm going to take $25 of my weekly investment and slowly chip away at that margin. I might do more. We'll have to see how each week pans out, but basically I want to pay off that margin and borrow less and less until it's completely paid off, and then we'll kind of reevaluate where we're at. We might pull the trigger on margin again once it's completely paid off, but I want to treat it like a loan and basically pay it off now. So with the addition of margin, I decided what was the best way to use this, what companies should I buy, and the decision I came to was to tackle my dividend growth issue. If you guys have been following, you know the dividend growth was negative about 4% last week. With the additions I made, it is now only negative 1.6%. So we've made a lot of headway on that just by doing a couple of purchases. The purchases we made were a couple of shares of Apple. I put about $1,000 into SPHD, the S&P 500 ETF, and I bought one share of PepsiCo. And then pretty much the rest of the margin, which is about $1,200, I've been trading on Apple Hospitality REIT. As you guys know, I am bullish on that stock, so I do feel like it's severely undervalued right now. That's just my opinion, but I'm kind of swing trading that to try to get a little bit of extra profits here and there. We'll see how it goes. Now, the reason I chose Apple first off was because their dividend growth is 10%. So obviously that's going to help the dividend growth here. SPHD was also another good choice. They have a 7% average. On top of that, their yield's good, and they have the diversification aspect of an ETF or index fund. So I just figured putting $1,000 into SPHD was the easiest and most logical way to add to this portfolio with the margin investment. Now, just by making those adjustments, the projected annual income has increased quite a bit, up to $250, which is about $20 a month now. So this isn't just a couple of dollars anymore. $20 a month is actually money that you could actually use on something. That's about half of my gas bill. Obviously, we're going to keep reinvesting this money, but it's starting to feel like it's starting to get some traction now. So all this is going to help keep me motivated and to keep wanting to put more and more money into the market and to grow this faster and faster. Now, if you're wondering why the dividend yield decreased quite a bit, it's because we've got that trade in APLE. They aren't paying a dividend at all right now, so it pretty much just ate away at that. As you guys know, I'm not really paying too much attention to dividend yield. Everything's all over the place right now because stocks are severely undervalued. Dividend yields are severely high and not realistic to what they typically are for a lot of companies. So to finish off here though, since we last talked, we got about 3 dividends paid, with our total of July now upping to $4.16. We've got quite a few more dividends coming in, so we'll have to see how the month pans out, but I'm expecting it to be a little bit higher than June. And as you guys can see, it is growing month after month, which is what we want for this portfolio. Now, as far as next week, again, I'm trading APLE here and there depending on the market and what's going on. So if you guys want to see those updates, pretty much you should be on Instagram. That's where I pretty much do the story updates for that. As far as normal additions to the portfolio, we'll have to see what next week brings. I'm thinking about starting to get into these Vanguard funds. We don't have any bonds in this portfolio, so it would probably be another good thing to add in. And usually bonds grow over time, so if I can get the right one in here, that would be a good addition to the portfolio. But yeah, I'm going to leave it at that for this week. So if you guys have made it this far in the video, hit the like button to let me know, and make sure you are subbed to the channel to make sure you don't miss tomorrow's update and other future updates